In the last couple of days, we have received several indicators which are indicating that there can be a possible slowdown in Indian economy. Now, this video can be really important for you if you are someone who invests in stock market, because if there is a slowdown in the economy, then we can change our portfolio and investing style according to that. Now, before diving deep into this video, I want to set context of this video and why this video is so important for you. In this video, we will discuss some facts and figures which will tell us the short-term as well as long-term trajectory of Indian markets as well as US markets. So here is a report which is released by some government entity, and what they have said is that the economic growth of India is not as per our expectations. It is way below than our expectations. So in this quarter, the Indian economy has grown with 6.8%, which was expected to be more than 7%. On the other hand, if we compare this performance with our previous 2-year performance of this same quarter, then it was 8.2%. But does that mean that Indian economy is not doing good? That's not the case, because however a bad quarter result, India is still the fastest growing economy, and on the second place there is China with 4.7% of growth in this quarter. So here is another statistic where it is said that in June the RBI set up a committee, and the committee is really emphasizing on how to control inflation, because in the last couple of months or years, you can see, and we all can experience a high rate of inflation of basic needs and necessities. So RBI is basically focusing on creating such environments which can create a deflation kind of scenario, and to control inflation, they are not looking for a interest rate cut. Now, if we look what will be the consequences of not cutting a interest rate, so if I talk only about stock market, the not cutting interest rate will not going to help stock market to perform, but at the same time, if we take a long-term view on it, we can see that not cutting interest rates will definitely stabilize our economy, and it will control inflation in long term. So now we will look at some US stats as well, because today's economy is really connected and it is a really globalized economy. So the performance of one country can change the performance of the another country as well. So if we see this recent blog, we can see that US Feds are predicted that they will cut interest rate in this following year, and it is predicted that for the next 3 quarters they are going to cut interest rate. So first of all, we have to understand that what will happen to an economy where there is a interest rate cuts. So whenever there is an interest rate cuts, businesses and other people, they try to leverage more, they try to borrow more, because they can borrow money on less interest rate. So the overall economy will do better, because the businesses will do better, as well as the people will also purchase and do some discretionary spending. Here are some more facts about US economy, and as you can see that US consumer confidence has rose in the last 6 months, but on the other hand, if you see that the US markets are not doing well in labor market. Labor market means the employment rate is not good as expected. But I think with the following interest rate cuts in US, the businesses will do well, as well as the labor market will also do well, because businesses will hire more and more people for their operations. So what's the conclusion of this video? So the conclusion is, for the next 2 to 3 quarters, Indian economy can be slower than the expected rate of growth. On the other hand, the US Feds will cut their interest rates, and that will improve the economic situation of whole Western nations. So that will also impact the growth of India, and that will also help in growing as well. So if you are a long-term investor, then it is very, very important for you to book profits from those companies which are trading at very high valuations and their growth track is not that much visible. So if you are holding such a company, then you should start thinking about selling those stocks and try to transfer those funds to those companies which are reasonably valued. I hope this video will help you to understand the overall structure of the economy, and if you have any questions, then you can ask me in the comment sections.